Well, welcome to another day of bond trade, really, because if you have a real estate loan or you're considering getting one, Wall Street is trading your money before you even sign any paperwork, before you lock the interest rate. If you've been watching mortgage rates over the last few days, you've probably noticed that not a lot has really happened. And that's exactly the story. That's exactly what's happening in the market. And that's what people need to really kind of wrap their skull around, is that the bond market spent the last several days of trading actually waiting. That's because they're not waiting for another inflation report. They're not waiting for another jobs report. They're waiting for one man to sit behind the podium this afternoon, the Federal Reserve. Now, the chairman, very little data has he put out there so far about what he intends to do. He's kind of holding things close to the chest. So investors are really kind of waiting to see what he's going to do. Now, they're going to try and answer one question. Did the CPI and producer price reports actually signal that inflation is coming under control, or is that just one good month? Mortgage-backed securities have been trading in a relatively really tight range. And not because traders don't have opinions, because nobody wants to place $1 billion bet just to have the Federal Reserve change the narrative a few hours later. So they're going to pause. Treasury yields are a little bit lower right now. Oil prices have eased. Mortgage-backed securities, they're almost unchanged. That's what the market is saying by saying that they're waiting without making those movements. Now, here's what everybody starts to get wrong here. Most people think that today's announcement is about whether the Fed raises rate or leaves them alone. That's only a small part of the story. The bigger question is, what does the Fed say about the future? What's going to happen with the market because of what he's talking about? Does he sound confident that inflation is finally towards his target, or does he remind investors that higher energy prices and global uncertainty could keep inflation elevated? Because of those words, we can move the market one way or the other and actually move it very, very quickly. So the Federal Reserve does not set your rate. Remember that. When they move the interest rates, they're moving it to take the price of short-term money and either make it more expensive or less expensive, which will put more money in the market or pull money out of the market. It will change what happens with inflation and our costs. That will tell traders as to whether or not they're going to put money into bonds, stocks, precious metals, commodities, other things, right? So it moves the market around. Your rates are tied to the mortgage-backed securities and mainly we're doing DSCR these days. So it's tied to our private label security that isn't directly related, but it's affiliated. So the Fed just influences what investors believe money will be worth tomorrow. Bond buyers step in, mortgage-backed securities improve, mortgage rates often move lower. And if Wall Street hears concerns about inflation, investors demand more return. Investors then will take money out of mortgage-backed securities. They lose their value. Mortgage rates move higher. Now remember, when you lock your mortgage, you're entering into the exact same trade. The person investing into the bond pools, they're buying your payment, secured by your promise to repay it. You're buying control of an amortizing, appreciating, income producing asset. Wall Street's trying to preserve the purchasing power of its capital. You're trying to control productive assets with long-term fixed money. They're completely different objectives. That's why I don't ask, did the Fed change the rate? I ask and encourage everybody to ask, did the Fed change Wall Street's opinion about the future value of money? Because that's what moves mortgage-backed securities. That's what moves mortgage rates. Remember, Wall Street's buying a stream of eroding payments. Me, you, we're buying control of an asset. The main question isn't, do I need to a lower rate to make this asset work? That's a backwards question. The question is, does this asset work in today's rate environment? If it does, you make the investment. That's simply another opportunity to optimize your capital. That's how smart real estate investors work. That's red in economics. You need to understand the system. Now let's look at the market right now and understand what we're up against and how the bond traders are thinking. Now, we're going to guess at this here because right now we're waiting for for commentary. And I don't think there's going to be a lot of movement. So you can see right now, as far as the mortgage-backed securities, we're down from where we were yesterday, coming into what we're doing today. Now, we're just kind of pausing, waiting here this afternoon. By the time you see this, we may already know what the Fed's going to do when you see this. But I drew this channel because I talked about it last week. For some reason, my system wasn't wanting to work. I find it very interesting. This top right here, where it peaked out back when Trump was talking about our quantitative easing in, 200 billion going in. This is what we talked about here, talked about it again. Then we had them come out and say, maybe we're not quite there yet. We kept talking about it. Bam, dropped the bombs. Look at that. That fell with the dropping of the bomb. But look at where it peaked out at with the bomb drop. And of course, my mouse doesn't want to play. So peaked out here. And look at these peaks. It's hitting these peaks in this downward channel. It is literally a downward movement and we can see the floor here. It's quasi floor, but where this floor's out, we are trading in this range. If people think we're going to get way back up in here like we were back in February, like, hey, I'm going to hold out till we get those interest rates to get down into like, 6.625, 6.75 for a DSCR loan for all of them across the board. Quit waiting. Guys, this is our channel. This is, I'm get that again, this is a guess, but there's enough information here to show that you lock it when we're coming up into this peak. You might want to float it down at the bottom, but if the bottom erodes, which it could, look, we have a floor here that if it blows below that, we could see it right into these bottoms here. So right now, we're not going to see these monster improvements. This right here, let me show you from here to here. We're talking about where we are right now to where we could be at the top of the channel. That looks like 100 basis points, guys. That's 1% in cost. That's it. Don't get caught up in this. Don't be sitting here wasting an opportunity on a deal you could close and lock up somebody else's capital that somebody else pays back, and you get to keep the appreciation. You get to keep the amortization that somebody else is paying off for you. You get to keep the cash flow and get to raise the rents and get the tax deductions. You got to set things up properly for all that. So if you have not, let's talk about your structure. Got to make sure you're right. You need to understand the system and use the system and quit jerking off and make the trade.